This stock has two bearish patterns right now, and if you can't guess what it is, I'll show you which stock in both patterns shortly. Hi, this is Tim from TradingStrategyGuides.com. I'm not going to keep you in suspense any longer. This stock is in a company that's been around since way before I was born, and that's quite a while ago. I can remember their television ads from when I was a kid, even though I've slept a few thousand times since then. I'm sure you've all heard of Johnson & Johnson, and yeah, I know it's not going to drop out of sight. I just wanted you to be as excited about this setup as I am. I'll show you this awesome setup and help you catch up with the open trades. And of course, today's trading maxim. Stay with me. Remember, you can speed this video up by clicking the gear icon in the lower right of the video and selecting a new speed. Let's take a look at our open trades. After waiting a little while, this Aussie finally hit our target. And I've taken half the trade off for profit and moved the stop to break even at 104.89. Ripple fiddled around down here at the entry for a while. Now it's popped up and it's retesting the bottom of the range. It did not close back in the range, so I'm happy with that. I'm also encouraged by all this wick action up here, which represents price rejection. Plus, huge volume on this down candle. So traders obviously like this short. I still like the way this looks. Now it's just a waiting game. I failed to mention this Tesla trigger right here in Friday's video. I entered just ahead of Wednesday's close at 219.62. The stop is 233.74 and the first target is 210.21. This push up on smallish volume right here doesn't concern me too much, but this concerns me a little bit more because we're getting back up into the range. So it's a few hours till close yet, so we'll see how this goes. If this closes back inside the triangle, I will shut this trade down. Okay, let's take a look at Johnson & Johnson now. Johnson & Johnson, a company so nice they named it twice. Wait, that's a joke about New York, New York, isn't it? Well, maybe it applies here too. I don't know. They've been around since like the 19th century, and they're responsible for a huge number of immediately recognizable healthcare type brands like Band-Aids and Tylenol and baby products, just to mention a few of them. They're ranked number 37 on the 2018 Fortune 500 list of largest U.S. corporations by total revenue, and it's one of the world's most valuable companies. They're traded on the New York Stock Exchange as JNJ and are a component of the Dow Jones, the S&P 100, and the S&P 500 indices. As I mentioned, there are a couple of nice patterns on this chart. First one we're going to look at is this bear flag right here. And as I like to say, a bear flag needs some bear before it flags. So we've got this nice push down, strong downtrend into the pattern. And then the pattern, of course, is a pull up in the form of a parallel channel. This has been going on, a month or so, with nice volume decline and nice volatility decline. So I like this. I believe these two things are the key: the declining volume, the declining volatility, and those are the things you need to look for in a pattern. I like this bear flag quite a bit, actually, except for one small problem, and that is this pretty strong support level here. It's been retested a bunch of times, and I think this is going to tend to hold price back. Now, there's actually enough space below here to most likely hit our first target if the ATR remains around 193 to 2. There's enough space to get our first target, but I'm not really going for first targets here. I'm looking for longer trades that will continue and give us bigger moves. I want to see something that's going to go on and make us a bunch of money. So let's take a closer look at this support level here. This support level is actually the bottom of a trading range that's been in place for a little bit longer than the bear flag. It's not the prettiest range in the history of ranges. It's kind of raggedy up here at the top, but I'm expecting a break to the downside here because of this dual pattern, and so because of this raggedness, I really don't like this long. Typically a range, I would be happy to take a close above this to buy or a close below it to sell, but I'm going to kind of change the rules on this one, which is not really a rule change, it's just the subjective part of my trading style, and that is I like this bearish pattern right here and I like this support, so I'm only going to be interested in going short on this. So here's the plan. We're going to sell a daily close below this range or below 128.55. I want to see at least average volume on the breaking candle to trade a full position. So the candle that breaks this low and closes down here, take a look at the volume bar. The volume bar needs to reach at least to this average line right here. However, if you've got at least 75% of the average volume, you can open a half-size position to reduce risk. And you calculate that number by taking this volume, dividing it by this volume average, and you should get at least 0.75. If you do not get at least 0.75 after you do that calculation, do not enter the trade. Just stand aside on it. The stop loss will be 1.5 times the ATR, and the first target will be 1 times the ATR. Make sure everybody's up to speed. I use the ATR to look at volatility and to also calculate my stops and my targets. So on the breaking candle, you want to look at this number right here, multiply that by 1.5, and then put your stop that far above your entry. Your first target will then be 1 ATR below your entry. If after entering the trade you get a candle that closes back up in the range up here above 128.55, we will take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout from these patterns should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down before we take a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. And that's the setup on Johnson & Johnson today. I say this every time and I'm going to say it today. Remember, I'm not trying to tell you what to do. I'm just telling you how I handle these trades, and if you want more details about what I do, look below this video for a link to my trade management video. If you've developed a trade management plan that works better for you, by all means use it. Trading is a very personal thing, and things that work for me may or may not work for you. You have to understand your personal psychology to find the best strategies for your own trading. And speaking of psychology, let's take a look at the trading maxim. Personal trading psychology is the reason for these trading maxims. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. I get these maxims from various sources, books, the internet, friends, coaches, teachers, others. Some of them I actually wrote myself, but not many of them. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure that you always do the right thing. Feel free to borrow from my list. Today, we're headed to the archives. I love this one. Tim's trading maxim number 2. There will always be another trade. This one has kept me out of so many bad trades, so many bad situations. Anybody who's been on this channel for more than 30 seconds or so has heard me talk about the FOMO trade. F-O-M-O. The fear of missing out. So you found this great trade set up and you lost focus, which happens to me all the time, and you missed the entry and it's gone halfway toward your target in your direction already. And you get all excited and jump into that trade because you're afraid that the market has moved on without you and you're going to miss out. Then what happens? The trade goes to where the first target would have been if you had entered the trade properly, so it would have been a successful trade, but then it doesn't go any further and it drops back to your new stop loss and you're out for a full loss. Now, that's a fictitious scenario, and I developed it just to point out the worst case scenario, but these things actually do happen. You were so afraid that you'd miss a great trade that you ended up taking a full loss. And then that gets back to my first trading maxim. Would you rather be in a trade wishing you were out or out of a trade wishing you were in? But that's a maxim for another day. But not only did you take the full loss, you potentially tied up money that could be used to win a few other trades. So when you identify a trade setup that meets your criteria and you miss it, it's okay. Don't jump in it. Don't be stupid. There will always be another trade. Don't enter a bad trade or a late setup just because you're afraid you'll miss something. Always tell yourself there will always be another trade. Remember the trade plan. We're going to sell Johnson & Johnson on a daily close below 128.55. If the volume is not quite average, go half size as long as the volume is at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to check out the trade management video below for details. If you like this video, then even if you didn't, go sign up for my free Trading Picks email list to be sure you don't miss any of them. Did I say it was free? Yep, it's free. I'll be sending out, maybe 3 or 4 trading picks a week. Everything from stocks to futures to cryptos to Forex, and you'll get to see them first. Plus, you'll get first notifications of anything special that's happening. It'll be the happening place to be. No, I'm not going to do that stupid joke again. I'll put the link below this video. Oh, and once again, I apologize for making you look at my ugly mug up there. That picture's from a few years ago when I had old hippie hair. I don't have old hippie hair anymore. So maybe I'll get you a better picture soon. And be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday and Friday for my analysis videos like this one. And Wednesday morning for training videos, which will most likely include a trade setup as well. Also, you guys have been extremely helpful in giving me some subjects to discuss for the training videos, but I could use some more. So please comment below with your requests, questions, and opinions on what you want the training videos to cover, and I'll add them to the list. I'll be covering the patterns for the next week or two, but after that, I'll go back to the list and we'll find some new things to talk about. Also, follow me on Twitter. If things happen between my videos, I post them there. I'll put my Twitter link below. Tell your friends about us and help us make this the best trading channel on the internet. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have an awesome week, and I'll see you next time.